Hey everyone, it's Ben Hardy here, and in today's video we have to talk about how car wholesale values have declined by over 3% in just a week. And oh, looks like I'm getting a call. Hey, what's up? Oh, the Fed funds rate has gone up by another 75 basis points. Anyways, all silly jokes aside, as always, if you want to save time and money the next time you purchase a car, link to my car buying guide in the description down below. And if you want to see more content just like this, then I recommend you subscribe because I post videos every single day. Let's get into it. So yes, the Federal Reserve just raised the federal funds rate by another 75 basis points. And so this is going to have a bunch of implications for the automotive world, especially when it comes to interest rates, right? And then on the other side of things, car wholesale values have declined by over 3% within certain segments in just a week, which, just to put that figure into perspective, last week when we discussed car wholesale values, the decline was like 1% per week, which was still a massive figure. So now 3 times as much in just a week. Things are escalating at a much faster rate as time goes on. First off, with this rate increase, this will surely increase interest rates on auto loans, which will decrease affordability even more. Now, we don't know exactly what lenders are going to release in terms of their new rates quite yet. Once my friends in finance tell me what the new rates are, then I'll make an update video and we'll discuss what this does to the market once we get the exact numbers. But for today's video's sake, all that you need to know is auto loan rates are about to go up yet again. And so I guess if you're in the process of taking out a car loan, you probably want to get it done sooner rather than later, because you're about to have to pay even more interest within most likely the next few days once these lending institutions get out their rates. Typically what you'll see every single month is lenders will have their new rates out by, usually the 4th or 5th of the month, sometimes sooner, sometimes a little bit later. It just depends on exactly what's happening. And so, yeah, just kind of expect those new rates to be out in a couple of days. And so if you're in the middle of working a deal, then yeah, get that deal wrapped up. The next part of this is the massive decline in wholesale values. Prior to this last week, we were declining at about 0.5% to 1% with most segments, which was already wreaking havoc within the car industry because it was putting a lot of dealers in a situation where they were underwater with a lot of their inventory. Now, with a decline of over 3% in certain segments, this is absolutely devastating. Like, this is really, really bad. I know that 3% doesn't sound like a lot, but let's say a dealership has a $50,000 car, $1,500 gone. And let's say they have a $100,000 car, $3,000 gone, right? And if you look at the average profit on used cars across the country, it's usually $2,000 to maybe $3,000. And so a lot of dealers, if they had any profit in their used cars, pretty much just had all of it wiped out to where they own the car now for what they will have to sell it for. And that's before we have more declines happen in the future. And we'll kind of talk about that more at the end of this video. But like, this is a really big deal. I'm not trying to be over dramatic, but seriously, like, having that big of a decline, I mean, just put that over the course of a month and you have a 12% decline in values. And so again, a $100,000 car losing over $12,000 in value in just a month. Nobody can work around that type of loss. In the short term, this is pushing dealers to really push to get rid of their used inventory, especially if it's an older age unit, because at this point the writing is on the wall. Dealers can see what's happening week to week. And so with these huge declines in wholesale values, it's frankly freaking them out. And so they're going to be a lot more aggressive with their pricing and, with their willingness to discount vehicles, because at this point, there's a lot of dealers that are like, okay, you know what? I just want to get rid of the car right now. I just want to get rid of the brain damage and then buy new inventory at these lower prices as these wholesale values are declining, so that I, am in a better position than I am currently. And so you're going to see a lot of cars starting to flood auctions. And that's not even talking about the repo cars that are flooding auctions. That's a completely different video we have to touch base on again, because, well, repos have gotten even worse. But anyways, they're going to be a lot more aggressive with their pricing. So that's all you need to know as a buyer, is you definitely have negotiating power, and just be upfront with the dealer. Just go, hey, you know what? The market's declining. Everyone can see it. And so you can either take my offer now, where I will buy this car, get it off of your hands, or you can wait a few more weeks while that car continues to lose a massive amount of value and sell it for a lower price than what I offered you today. Just be blunt with dealers, and I think that you'll be surprised at the deals that you'll be able to get currently. Now, in the long term, this is actually pushing dealers to be really bearish when it comes to car sales. So prior to these massive declines, a lot of dealers were still in that mindset where they're like, you know what, we can replace you as a customer, but we can't replace the car because we don't have enough inventory. Well, that's completely flipped at this point. And now dealers understand that, well, they can replace the cars now because a lot of cars are starting to flood auctions, and they're starting to have even their new car inventories build up a little bit, and so they can't replace the customers at this point. And so they're going to work a lot harder to earn your business, and that is just going to continue to increase as time goes on. That being said, another long-term effect of this is trade-in values are going to be really, really weak from dealers. And what I mean by this is they are going to seriously lowball the heck out of you because they see these massive declines in wholesale values just like what we are seeing. And they go, okay, well, if I get this car traded in today, it's going to take a week to get this car reconditioned, cleaned up, and then have photos taken of it and have it fully posted online. And at that point, it's probably going to lose another 3% in value. This is what dealers are assuming at this point, is that these declines are going to be consistent and potentially increase. So I need to offer this person under book value for sure, and probably under current wholesale values, so that I'm not in a position where I'm losing money in this car because of how rapid car values are going down. So understand that trade-in values are only going to continue to decrease as time goes on over the next few months, and that dealers are going to be really soft when it comes to their offer on your trade-in because of what's happening within the market. Another long-term implication is we're going to see a lot of dealers go out of business. Now, I don't think new car franchises are really going to go out of business because they still have quite a few customers coming in for a lot of the new product. There's still not enough supply versus demand with most manufacturers. And then they also have service departments to prop them up. But used car lots are definitely going to get absolutely decimated by this whole situation. And so, yeah, you're going to see a lot of used car lots go out of business. And then what that is in turn going to do to the market is it's going to lower prices even more because they're going to have to just wholesale all of their inventory. And so you're going to have a bunch more cars start to flood these auctions. And I know that it seems like I'm being really negative about the situation, but it's just the only logical pathway when you look at how fast these declines are and how much money a lot of these dealers paid for their inventory. You have a lot of dealers that basically paid close to retail value for a lot of their inventory because, again, everyone was in the mindset of you can't replace these cars. You just need to get inventory. And now we have these wholesale values that have the bottom completely gone, and they're just falling week by week. They're falling faster than the stock market. It seems like it's absolutely ridiculous. And so when you have dealers that own inventory for retail value, and now the wholesale value is declining at the rate that it's declining, like, something's got to give, right? They only have so much money. And so once the money runs out, they're out of business, their cars flood the market, and then the market declines even more. And then even more dealerships are going to go out of business because then they're going to be even more underwater on their own inventory. It really is turning into a whole positive feedback loop. How can you use this information to actually help you out as someone who's looking to purchase a car? First off, when it comes to used cars, I would just avoid them at this point. There's way too much volatility in the used car market for it to be worth it. Unless it's something that's like super specialty that has its own market, I would avoid it at all costs because we still have a bunch of repos flooding the market that are causing a lot of volatility. We still don't have the flood cars in the market yet, and we got to see what that's going to do to things. And then, like I said, we have these dealers that are inevitably going to go out of business, and their cars are going to flood the market in the near future. And then with these interest rate increases, right, demand is going to diminish even more with used cars because right now, like, used car interest rates on average are like 9%, and they're probably going to be well over 10% in the next couple of days. And so with all of this demand destruction, these prices are going to just absolutely plummet. And so at this point, just wait for the dust to settle when it comes to the used car market. Now, when it comes to new cars, this market is just completely different. The advice that I've heard from a lot of channels is that you should wait until sometime later this month or into December while you have end of year deals. And This is usually pretty good advice in a normal market, but there is one problem. First off, interest rates are going to surely increase in the next few days. So that means that you'll most likely be paying a higher interest rate on a new car in just a few days, which makes that new car even more expensive than it already is. And then on top of that, manufacturing is really struggling right now. And so even though we are starting to see some new car dealers slightly stack up with inventory, by the end of the year, all of those inventory gains are probably going to be gone. That is what the trend is looking like. And so you might be able to get a slightly better deal at the end of the year, but then you might not be able to even find a car. And so that is going to be the catch-22 with the new car market. Best advice that I can give you when it comes to a new car is just make sure that you negotiate a really good deal. And I would say buying sooner rather than later is going to be the best course of action, because it looks like availability is going to be a little bit of a struggle in the near future. And well, if you're ordering a car, I think sooner rather than later is also the best course of action, because car makers still think that they have a lot of pricing power, and prices just continue to increase every single month. I mean, it's absolutely ridiculous. And so you'll most likely be able to order the vehicle that you're looking at for a cheaper price today rather than if you wait a few months. And a lot of people might bring up rebates. Well, the thing about rebates is those come into play when you take delivery of a vehicle, not when you order a vehicle. And so if a manufacturer releases a big rebate today and you order a vehicle today, you don't get that discount when you take delivery of the car. You get the discount at the month that you take delivery. And so I would rather just lock in the lower MSRP price, and then just, maybe you'll be lucky and there'll be rebates, but that's kind of the best course of action there. Anyways, this video is getting a little bit too long, so that's going to sum things up. There are a lot of other side topics that I kind of talked about in today's video that I need to make dedicated videos to give you guys updates on, and I will once I have time to make those. Anyways, as always, if you want to see more content just like this, then I recommend that you subscribe, because I post these videos every single day, and I'll see you.